Thank you for coming along. I've just recently joined this organisation, Impax, as their CFO, and I'm going to say it's a privilege for me here to come and speak about this organisation. We just had our half-year results last week, so this is a deck that we use there. But I sort of want to give you a real flavour of sort of the history, a bit of the where we are now, and a wee bit of the strategy. I'm going to start with Impax. The first thing I'm going to say, this is not ESG. Okay, in our organisation, we're not allowed to say ESG because what this organisation, they've been doing it for 25 years, long before the banner, the fashion, the fad that was ESG came along. We have found our niche in finding companies in this that are going through the transition in this to the more sustainable economy is what we call it. And what we identify in there are companies and sectors that are going through extraordinary change, and that creates features of very high growth opportunities. And the opportunity, it's complicated. You need to understand their growth cycles, the tech that they're using, and there's huge opportunity for mispricing, and therein opportunity and a great landscape for asset managers. So Impax Asset Management, it's been going for 25 years. They've been doing this sustainable investment. It's highly attractive for that reason. There's about 80 very solid, very stable team of investment managers that have been with, and stable is very important because very few people in that team leave, which is a very, very good sign. It is global. We only 20% of our funds are UK based, the rest US, beginning to grow in Japan. Just total global footprint where we have invested in building that distribution. And over those 25 years, we have built what we call a scalable business, in that we can double from where we are today based on the funds that we have in place, by the technology, by the distribution that we do have in place. So just to give you an idea of the 25 years of growth. So it started in 1998. Ian Sim, who was the founder, who's the current chief exec. And at the end of 1998, there was 15 million in funds. Wind forward 10 years, there was $1 billion. Wind forward 20 years to 2018, the billion had grown to 12 billion. Wind forward 4.5 years, and there's now 40 billion. So it has grown from 12 billion to 40 billion of assets in the last 4.5 years. And I'll come back. Some of that was with the tailwinds from ESG, the fashion that's now beginning to fade. But what I'm going to say is, what I see, the commitment, it's institutional money that we have, which is a bit more sticky. But whilst that fashion is beginning to fade elsewhere, the money that came in to us in that phase is not going out again. That's what we're seeing, and sort of one of the key features of this organisation. So that hopefully gives you a wee bit of a history. What's this when I talk about this philosophy, the investment philosophy that we have, is that there are sectors in every economy, in every part of the world, whether it be transportation, energy, the transition to green energy, financial, healthcare, agriculture, all of these are going through mini industrial revolutions. And that's what we seek to invest on at the right stage in its growth cycle. It has been fueled by regulation, by the US, the Biden Investment Reduction Act, the Inflation Reduction Act, the CHIPS Act, the Infrastructure Act, trillions. Never have we seen in our lifetimes this amount of subsidy going into any part of any economy. And this is where we seek to operate, to take advantage of that growth, that uncertainty. And there's risk in there. That's what we do, risk management. And it just provides a fantastic backdrop for asset management. So it's our job to pick the stocks in those sectors, build up that sectoral expertise and follow it, laying new tracks, new ground in terms of sort of the investment opportunities that are in there. So I've just said we sort of had our half-year results just now. What's that telling us in terms of, so we had, whilst the ESG wave is passing, our assets grew in the last 6 months. This is just a wee snapshot of the last 6 months. So, we now have 40 billion of assets, and I don't know, you guys might follow it, and there might be somebody in the room knows more than I do, but there are very, very few, if any, other asset managers in the UK who are reporting growth and positive flows in the current stalemate nearly that seems to be playing out in the world of equities. So a very robust performance. And look, we are an investment manager, so we are all about the performance. And we can say that 8 out of 10 of our major strategies, 90% of our assets are performing above their 5-year benchmark. 80% are performing against their 3-year benchmark. And we're seeing very solid improvement in the 1 year, sort of the recovery from sort of that value, the switch from value that happened as an investment theme. And we are expanding. We know this opportunity is global. So we are expanding across the world. And we've just opened an office. So we're in London-based, East and West Coast in America, Japan. We run our sort of post-Brexit business out of Dublin, and Hong Kong are the other offices. Expanding slowly and carefully. And actually our expansion in Japan was funded fully by a grant from the Tokyo Metropolitan Government for any green companies. So we were able to sort of, because of the sustainability lens, have that office opened and paid for by the Japanese government. So careful expansion. Very proud of some of the awards that we've won. And yes, we did win the ESG Manager of the Year, and we couldn't turn that down. But that's sort of, it's just, just to give you a sense of, just the great growth story. It's not been a straight line, that's for sure. But this is about sort of, hitting our stride just at the right time is really where we see Impax just now. We did have our half-year results, so just the size and shape of the business. So it's about 40 billion of assets that you can see there grew over the recent half, but grew over the year, which is, for asset management terms, we're certainly bucking the trend of the industry, and long may it continue. Revenue then, about 88 million, is sort of a half-year revenue, so it's a substantial organisation. But the profits did drop in this half year, despite this great story about growth. And the reason for that is, we've got this strategy, we believe in it, and we have the confidence to invest in it. So that really is investment. When I go back and talk to you, when you mentioned those numbers, how quickly it's grown from 12 billion in 2018 to 40 billion of assets, that happened so quickly over lockdown. There's been a period of where we've really had to sort of catch up on costs for risk and back office and be able to look after all the clients that we took on board. So it's really, that's a good solid outcome. If you look behind the 33.4 and the 34 of the previous 2 halves, they were flattered a bit in terms of the profitability because we had all the revenue, but maybe not all the costs. So not only have we caught up in the costs of just being able to safely manage now, so an investor, might take fright looking at this and going, oh my goodness, you're going to put another 7 million in every half year. The answer to that is no. We've built enough to get us safely onto a step where we can manage everything that we have now and grow and scale from there. But we've also in that time invested in this distribution, global reach, in Asia. We're really beginning to see that come through now. America, there's lots of geopolitical issues in America, but we are so well placed when that turns around. So we've made the investments. This is a bit of a waiting game that the business now goes into, and we'll manage the costs really carefully as we go forward. Assets under management, we've talked about. The shareholders' equity, that's just a measure. We have a lot of cash in the business. The accounts will show 62 million of cash, and that will grow through to the end of the year. Very, very big, comfortable capital buffers. Like as a CFO that I've taken over, a fantastic balance sheet sort of to be looking after. Operating margins, are just slightly depressed, but this business we aim to have long-term 35%, and minimum mid-30s, edging towards the high 30s is really what we expect to be an acceptable operating margin. And dividend, we've had growing dividends through that whole growth story. We just held it flat at the half year, saying nothing other than caution given sort of the uncertainty in our markets. But this is really sort of the message in the business that, okay, look, it is challenging out there for all investors, big institutions. The money's rushed into money markets. It's sitting, it's risk off is what we're looking at. But we're beginning to see in equity markets, when you're looking across the globe, some sort of strength returning now into equities and corporate revenues. Across the board, actually broadly strong, but of course all the organisations we're investing in dealing with costs that have been hit hard by inflation. But we're beginning to see signs that are encouraging. But the most encouraging signs for this business that's been built over the 25 years is just these policy drivers across the world for people investing in this, because the governments know it's the right thing to do. This Inflation Reduction Act, in the US, we say, I would have thought we would have been standing, that was announced last August, I would have thought we would have been standing here saying, look at the money flowing into us. But there's just so much of a political landscape to step through in the US. But, the Biden administration has washed away all of the Trump anti-ESG sentiment. All those rules have gone. But everybody's still quite nervous. A US election in 18 months. But what we can do, and are actually beginning again to see that work, is we just go to the blue states in America that we know. We don't go to clients in Texas or Florida, where we know that there's going to be hurdles for them to jump through to justify to clients why you want to invest in a company that's focused on green things. So that's, tactics that we can deploy, but, we're really building that distribution out in America so that we can get across all of that. I don't know how many would be close to all the regulation that's now coming in. SFDR, it's called. We'll all have it in all the industries I think you'll hear about tonight. But that works to our benefit. So the way the rule simply works is that you've got Article 8, Article 9. I don't know if you've heard of that. Article 9 are the gold standard of none of this greenwashing. If you're Article 9, you're whiter than white in terms of what's in your fund. Article 8, the next best thing. The majority of our funds and companies we invest in are Article 9. And the rest, Article 8. So this legislation came out. A lot of organisations, particularly in Europe, were saying, look at my wonderful Article 9, Article 8 funds. When you put, and this is what the legislation did, you had to put a real sort of x-ray on what's in your funds, and a lot of them have been downgraded. This is helping us a lot. And in fact, the taxonomy that the European Union uses to say whether it's Article 8 or Article 9 was actually invented in Impax back in the early 2000s. So, they're world leaders in just, if you're going to be sustainable, this is how you should be doing it. And as I say, we've made the investments. There's a specialism, there's an authenticity that, it is Article 8, it is Article 9. Very stable team, very important, and we've invested. So this is sort of it. It's been a great story up until now. And you look at all those sort of favourable conditions that are in front of us, and that's really sort of how we look into the strategy and the future. I'll rattle through some slides just very quickly here, just to give you a sense of. So we've sort of two camps that we look at. We've got a whole set of funds called environmental markets, which is about 62% of our assets, 67% it was, 62. These were sort of the first funds that we had. And we call them the thematic range. And you can see out on the wheel on the side, that they just dedicate it. We just invest in companies that are dealing with the transition of water, how you save water, how you do all those things. We have a food strategy. We have a climate strategy, very specific strategies. They're all the real Article 9 funds. And then we have sort of the new kid on the block, which are the sustainability lenses. And we've got a lot of tech in there. We never were in the big sort of the FANG fad or Tesla. Tesla's never made it into our funds. But this is sort of, just as a broader, a bit more sort of core, we call it. So global equities are really in there. And then we've a bit of private equity in this other bucket. But that sort of gives you a sense of, what we're about. Having a food strategy, I just find is amazing in terms of what's in there. What does that do for you? We're very well diversified. So there's still an awful lot for us to play for. But what I will call out is BNP have been an investor that, they came in 2008. and owned 25% of the company. Now that's been diluted down to 14. They made a lot of money on that. They didn't, it was just a good time to sell, good for them. But they've been our distributor since 2008, and they do account for, a good, nearly a third of the assets, just over a third of the assets of the organisation. But the strategy is now, as the organisation grows, we're building our own distribution, and that's what you see in the other pieces that are beginning to grow. And then well diversified on the revenue, as you sort of see. So absolutely, we're diluting the revenue away from this big BNP, which, is a fabulous relationship. It works for them, it works for us. And it nearly sort of stops us being a takeover target because BNP, are so loyal, and it's like a poison pill, which actually is very, very good for us. And then, just as we build our own distribution, we're able to dilute away and build strength into the business. Again, well balanced by geography. There's only 300 people in this organisation, and I mean, like 2 years ago that was 100. But they well diversified. This is where the assets, we knock the doors all over the world with this proposition that we have. And I think for me, the piece I would call out on this is that UK is only 20%. So, we're exposed really. And the Asia Pacific, that's really beginning. We see huge opportunity, Hong Kong office to take advantage in China. And Japan is actually well behind the curve in even its ESG agenda. So just getting into this whole, the value that's to be found in investing in the transition to this economy. We then look at sort of some of the big names that we have, just to give you sort of a flavour. St James's Place is about 6 or 7 billion of our assets, and very positive net flows in the last sort of period, which is really good. The other accounts that we have in the UK, we've seen a lot of this, post Liz Truss, this LDI issue. A lot of people taking money out on that. Some of it's beginning to come back in again, but not in time sort of to catch this snapshot. And North America, I should say that the light blue was the last 6 months. So it's our year end is September. So it was April to September last year is the light blue. So if you look at North America, huge flows, and then that's all paused because of just the whole, anti-woke, whatever they're calling it out there. That's nervous, just waiting on the sidelines is what we see. So it's actually going backwards. But when that turns, that will turn very, very quickly. BNP, so they had been outflow. So when your biggest client's an outflow, that was the tail end of last year, not good. We can see that coming back in again, which is very good. But where our real success stories have been recently in these last two is in building our own direct distribution across Europe. So we won two very big clients, ABN AMRO, 2 big mandates there, and Lombard Odier as coming into some of our UCITS funds. And then the star of the show has been our Asia Pacific. That's a huge, that was actually one client, nearly, just in one hit, 500 million GPIF, the largest pension company, the largest pension fund in the world. And they actually came to us because of fund performance, and only after they'd invested in us did they uncover our sustainability story. So we see huge opportunity still to come out of that, which is great. Just to canter through sort of some of the funds there very quickly. So the performance, the dark blue is the Impax performance against their indices, their targets really. So this is about 12 billion of this sort of new kid on the block sustainability lenses. So the 3 and 5 year performance very strong. The first year returning, that global opportunity is our biggest fund, 9 billion. Well ahead of its 1 year, and well into recovery. So just across the piece, doing well. The sort of more mature funds, this is about 24 billion if you added all that up. Again, good strong performance of those dark blue lines. The sustainable food though is the problem child of the pack right now. All that fad towards meat-free meat and all that stuff has sort of begun to sort of wane, and nothing has replaced it. So that fund is it's 1.5 billion that we need to sort of get that back on track. We do listed equities. That's the largest part of the business, 96%. However, we have many irons in the fire as we sort of develop. We will have new strategies, social, when we look into developing economies. across the world. That in healthcare, in sort of all these other sort of pieces that we see, there have been huge opportunity in there. And we've just launched a sustainable infrastructure fund. We have opportunities to grow in fixed income. We have $1 billion in there. We haven't even tapped into that market. And we have a small private market. I spend part of my job valuing half-built wind farms in Spain. But a very small part of that. The organisation takes a global leadership position in building that authenticity into the business. Our policy and advocacy team, what we look to do there is engage with those people that are trying to sort of change the world for sustainability. Demand by global governments, a team of 4 people that we have. We seek to sort of just own this space in terms of bringing the investment story to the policy setters across the globe. Very important piece to us. And then, of course, we have to hold ourselves to very high reporting standards for our clients. We hopefully are again trying to set ourselves out as the best there is in terms of stewardship and engagement and the reporting that we can do for our clients, which is very important because they've got somebody breathing down their neck. Last slide, and that's me finished, is really just to sort of give you a sense of where the people are. So UK based, a few in the US, small offices that will just grow slowly over time. We sort of feel we've built the architecture, we've got enough. And up there I've said we've got about 40 billion of assets. We can grow, we've got the capacity in those strategies and the capacity in the organisation to double those assets from where we are today without having to add anything new. But I've talked to you as well about there's lots and lots of new things that we can go for as well that we're working on. And this is really just I'm not really going to speak to that, but that's really where we're at is, the outlook very, very strong. And this authenticity, the distribution network that we've built, the strong pipeline. And when the US and we expect it to happen in fairly short order, just the global economy gets back into equities, we're expecting quite a turnaround quite quickly. And if we don't, this is the flip, is that we can live very happily where we are today with the people that we have and managing 40 billion of capital, which we're very proud of, that we have directed 40 billion of capital across the globe into making the planet a better place. That's how we look at it rather than investing in these things for the sake of. It's all about the return. That was everything I had to say about Impax, but I'm very happy to take questions.
Excellent. Thank you, Karen.
Thank you.
Do we have any questions for Karen in the room? You've got a question. Just Roland.
Hello. The Inflation Reduction Act.
Yes.
Could you talk through what that is a bit more, please?
So, well, this is, now you're going to get me get my billions and trillions mixed up when I look at this. So this is roughly about 50, it's in the trillions, and by the time you work it through, it's just incredible. Where Biden has just basically set aside this amount in subsidies to organisations that nearly fit this, whatever they do and spend this money on, that they're going to reduce greenhouse gases, do the net zero, do the carbon reduction in the US. It really is an incredible, it's never has it been seen before, this amount of money. The European Union are doing the same. The UK isn't. The UK government policy is not to intervene. But, it'll be hard not to. When, if I even look at what Impax does, we're allocating and busy doing things in the US and in Europe and actually not really in the UK. So again, I see that as opportunity. But it really is as straightforward as that. It is just massive subsidy, lots of detail around it. But what you've then got going on in America, unfortunately, is just sort of this politically driven, anti-woke world that just sort of says we're going to ban you. That's what had been in place. We're going to ban you investing in the transition to a green economy. And that just makes no sense as each day goes by. So that's why it's just not going through as quickly as it should, but it really is just simple. I mean, it is the trillions. I want to say 55 trillion was the number. I can't quite, but it's eye-watering.
Any more questions? Just over here.
Are any of the investments that you have look at purely green things? Do you do investments in battery technology and wind and all the things of that nature? Because it would be a very good sales point if you did say that you were actually had a lot of investments in ESG.
Well, didn't you know that's sort of the thing. Sort of we do and we don't. So everything we have in our funds, if I understand the question, is because that's what Article 9 requires you to do. That sort of says when this company is done doing what it's doing, carbon is reduced. Net zero is getting closer. Those sort of things. It has to be 100% of the mission of that company. So that's what we sell, but we just don't put it under the banner of ESG. ESG, like the history of it, Ian Sim, who was the founder of this, was in the room the day the words ESG was ever first mentioned by a bunch of McKinsey consultants, I think, who, you might tell me you were one, I don't know, but who, were sitting, 2004, had sort of come up with all this stuff about, let's look at companies that, care about the social side, that are sort of helping the planet. And they went, we're standing on the stage in 10 minutes, we need something to call this. That's where ESG came from. So I don't know if your question was, you think we should maybe badge it a wee bit more ESG?
Yeah, I just think that there's a demand. If you try and find a fund that's ESG,
you
can't really find one.
Yeah.
And you do find sustainability funds.
You do.
And, I've asked all our investment managers, where are they?
Yeah.
We sort of shake their heads. They say they're trying to do better. So.
Oh yeah, and I think there's something. What I think I did say, and maybe is that it's institutions. We go to institutions, that sort of are reaching out through institutional world looking for a solution. So we don't market, and maybe we should. But I can see that. But there is some ESG will be a fashion. It's on its way. But sustainability is here to stay. And we talk about being a more sustainable company. So somebody says, what do you do when we get there to net zero? And we are a sustainable economy. And you go, no, we'll be a more sustainable economy. And there'll be the next level of organisations to go for. So I think ESG is too broad, is, I suppose, really what we say. And we found our niche. And that's what we really seek. But there is probably a retail angle there. So that's a good question. Thank you.
Thank you very much. And we've got another question just here.
So thanks very much for that presentation. So just based on that niche then, are you not at risk of just running out of assets to invest in as you accumulate more and more AUM?
So that is one thing that we manage very, very carefully is the capacity that we have. And you're only allowed, if we find the best EV battery company in the world, you can never have more than 10% of them. And then everybody's trying to pile into these assets as well, and then the prices just rise. So I think that is, yes, you're absolutely right, but we manage that through our capacity. And that's why you see us moving out now of those environmental themes. When everybody's trying to do water, well, do you know what, we were in it and, did it. And, people are all trying to buy. It's a very small, actually, you're right, Schneider Electric is a very green company that everybody wants to get into, and it's now like £20 made up number. We bought it at £1 because that's our ethos, is to find these companies to go. And I think that's where we see the capacity, is why there's such focus in the US, because if that stimulus that's in there, there are going to be so many companies now. Not all will win, but so many companies that start up just because that's all happening. And then you see the new funds, social, will be very broad. And the fact that we play globally is the other piece that I think is how we address that. But it is a risk. Thank you.
I think we've got time for at least one more question. We've got any more?
Oh. Better answer.
Thank you. There's a degree of consolidation in the active management industry. You mentioned you have a BNP investment as a defensive position.
Yeah.
But what about acquisition?
Yep.
Would there be any interest in acquiring to further growth?
So yeah, that's a good question. I do like. I think it was after Rathbones and Investec came together. It was like 100 billion's the new 50 billion. That was black blue's the new black or whatever. So we did acquire in the US. So we're a small company. And sorry, let me step back. The answer is yes, okay? But if we find the right thing. But the right thing's all about culture. We're a small company of 300 people. We did acquire our distributor in the US. It was about 8 billion of the assets that are in there back in 2000 and 2018. And that was 100 people in the US, and we bought 100 people in the UK. And culturally, that was incredibly difficult for an asset manager. It's all about the people, the asset managers. So we will and would seek to acquire, but only if we found the right culture. But we genuinely believe in that. So somebody said to me, I'm going, how do I get from 50 billion to 100 billion? And the answer is with the current strategies that we have. So we have, we have a very, very strong organic growth. Where we may look, though, is into those areas of fixed income and private equity. But they'd be small add-ons rather than a big, let's try and double the size overnight. So there is just a confidence in the strategy that we have. But we always look out.
Excellent. Thank you very much, Karen.
Oh, time up. Thank you.
Really appreciate it.